Proud supporters of Africa this week. Engen, with us, you are number one.
Hello and welcome to this edition of Africa This Week, your wrap of what happened across the continent. I'm Mashudu Masuta. This week, we discussed global dynamics and their impact on Africa. Financial economist guru Professor Joel Stern, CEO and chairman at Stern Stewart, reviewed the Eurozone crisis with us.
It's a disaster. In just the last few months, the market values of the big banks across all of Europe have dropped in half. Can you believe it? Why is that happening? Because a lot of the debt of the countries was forced on the banks themselves. The banks are the ones holding all of these assets, and the asset values keep going down. You know, it's interesting. If you have a currency block like the euro, and somebody misbehaves, and they had rules. Don't forget, a few years ago, the Maastricht Treaty was signed, and nobody was supposed to have a deficit larger than 3% of their GDP. Now, only Germany qualifies under that. Everybody else is violating that. If you have rules and you don't abide by the rules, this is what you get.
Okay, the biggest deficit seems to be that incurred by Greece along with all their debts. Should they default? Should they not be allowed to default through a second round of bailouts? What should happen here?
I have to ask you a question.
Oh, no, please don't.
Oh, yes, I do. That question has to be asked in terms of who is to benefit. If we're saying, what is the best thing for the Greek people? What should they do? What is being done to them now under the Euro plan is a terrible thing. People are being asked to lose their jobs, number one. Take lower salaries, all kinds of horrible things, okay? What's the best solution? Believe it or not, they should drop out of the euro. And you know what would happen overnight? The drachma, that would be their currency, would collapse. No jobs would be lost. The drachma would collapse. What does Greece offer the world? Beautiful beaches, beautiful hotels. Guess what would happen next year? The economy would soar. And the people who are right now about to lose their jobs would be employed in a very successful economy. In other words, what all of this is happening right now is exactly the opposite of what they should be doing.
There are calls for the IMF to increase its funding cycle, particularly for the banks, the so-called European Financial Stability Fund. Has it worked?
Of course not. Because if you subsidize something and you don't put corrective measures in place, all you do is delay the final day of reckoning. It's going to come sooner or later. It's simply going to take place a little bit later. There's only one way out of this. Either the countries that are in trouble have to drop out of the euro and they have their own self-correcting mechanism that fixes it, or the other alternative is there's only one country left standing, and that will be Germany, and they'll have to pay the bill for virtually everybody.
So what do you make of people like George Soros who say there's only one thing left here if you're going to continue to work as this amalgam, this economic bloc, Eurobonds? You have to do it, and you have to review monetary policy and how the ECB works.
The reason I think it's a bad idea is because you need to have, when you issue bonds, consequences. If you're going to have bonds now issued across all of Europe, then what type of discipline is that going to take on the individual countries and the individual banks? To me, that doesn't make any sense. In fact, the reason why we're in trouble now is because we haven't used discipline in the past. If you're going to use Eurobonds, you can forget about discipline entirely.
So what should happen to the banks right now? Because, you know, you may say let Greece be allowed to fail, let it drop out. What happens to the rest of Europe? Because as I said, the French banks are exposed. There's just so much worry right now. And there is a sense that you've got to come in with some sort of a financial stability program for the banks.
Forgive me. I'm telling you, the banks have already lost the money. The value of the bonds has gone down, okay? The equity has been reduced, and that's why the share price is already reflected. In other words, what we have to do is say, hey, listen, we made mistakes in the past. Now the time is to do what? Well, I made this recommendation a few years ago, and one bank followed through. It was HSBC. What they did was they said to their shareholders, we made a mistake. We're in big trouble. We need new equity to replace the equity that's been lost. We're going to issue new shares, but to our existing shareholders. And guess what? The shareholders put up the money, and the bank is in great shape today. It's the only bank that actually did that. Don't you find that fascinating?
I do. I find everything you're saying fascinating. So what about us in Africa? Because we do have many countries that rely on Europe as their largest trading partner, where their currencies are so closely interlinked to this faltering euro.
Well, we get lucky sometimes. China is doing not as well as it was doing before. Heck, they're only growing at 8% a year. Isn't that tough? India is growing even faster than China is. The two countries are on fire. Singapore, Taiwan, South Korea, they're all doing just great. And so guess what? South Africa simply says, hey, listen, instead of looking at Europe over here, we'll just kind of move over here. We'll do business over here. And they will. We'll do business. South Africa is doing just great, in my opinion.
The Institute of Directors in Southern Africa's 6th annual business update got underway in Johannesburg this week. The aim is to give directors and senior executives in both the public and private sectors a clear-sighted look at the opportunities and challenges that South Africa offers. Azar Jameen, chief economist at Econometrics, spoke to us about South Africa's global standing and the role of business.
I think they accept this responsibility, but I'm not sure that they fully recognize what this responsibility entails. One gets a sense of a little bit of a complacency that we are the mightiest economic power in Africa, and therefore if we want to go into Africa, we just decide and we go into it, and that South Africa will be used as a base from which the investors will want to penetrate Africa. And my warning was that this may not be that easy, and that in fact South Africa seems to be dropping back in terms of its leadership of the rest of the African continent.
It's a very sensitive issue, this idea of South Africa being the natural leader of Africa purely because of the infrastructure and the economic value of the country. There is a sense that South Africa should see the competition, the rivalry that exists economically in Africa, and not just accept that it's a gateway into the rest of Africa. It should also be looking for opportunities, and it should also be contesting the terrain alongside Brazil, Russia and India, and that's not quite how they approach their economic.
No, that is exactly what I was suggesting by the complacency which exists, because Africa without doubt is opening up and is offering huge opportunities. The world's population is increasing inexorably, and the strain on the capacity of the earth to provide all the natural and agricultural resources is enormous. And Africa is the last bastion of untapped resources, and South Africa should be climbing in there really rapidly.
How would you respond to companies like MTN, Shoprite, Checkers, Massmart, who say, but we saw this a long time ago, and that's why we've opened so many new entities across the African continent?
Bully for them, and we see precisely how beneficial it has been for them, and they have become leaders. I just think that many other South African companies could be emulating them and have not done so. There's been a reluctance to really get one's feet too muddied in the African waters.
This week we've seen the Prime Minister of Turkey visiting South Africa, meeting with the leadership here. So you do get a sense that South Africa's leaders are starting to cast their net wider, look into new areas for opportunities. It's not the conventional go to Asia. They're looking into Central Europe, they're looking into Central Asia, into Latin America. Are they doing it fast enough?
I think that some companies are indeed doing it fast enough, and in part they're doing it because they are being restricted and regulated domestically, and therefore no longer seeing their growth potential being fully exploited within South Africa, so they are looking elsewhere, and one would hope that many more follow suit. And that can rebound to the benefit of South Africa, because the more South African companies go abroad, the more we get an interplay of technology, information and opportunities to and from the country.
Where are the competitive advantages of doing business in South Africa? You're saying some companies are withdrawing because of restrictive regulations. The labour issue has been a very topical one in South Africa. The need to have flexible labour laws, the need to improve on the skills of South African workers, that's a huge constraint.
Those are huge constraints. You've outlined them perfectly. The third constraint, as far as I'm concerned, is that there is just insufficient small business entrepreneurial activity in South Africa that gives it a vibrance. And more than anything, whereas in the rest of Africa, governments are opening up, the prototype of a dictatorial African regime raping its economy is passé. That's history. You are now finding more and more African countries moving towards a more democratic dispensation, freeing up their economies, encouraging business activity, and trying to entice businesses to exploit the opportunities. In South Africa, the government seems to view business almost as an enemy in many instances, and is making life very difficult for a lot of businesses as a result.
Nigeria this week announced it will begin a phased-in end to fuel subsidies in the 2012 financial year. To discuss reform in the Nigerian oil sector, we spoke to Dakuku Peterside, chairman of the House Committee on Petroleum Resources Downstream.
Essentially, it's not true to say that the PIB is unnecessarily being delayed from becoming a law. You appreciate the fact that lawmaking requires painstaking effort, requires diligence, require wide stakeholder consultation. It's unfortunate that the PIB bill was initiated during the last assembly. And no sooner than it was initiated, Nigeria got into a transition program, trying to transit from one government to the other, one civilian administration to the other. And it was severely affected by the electoral process. That as it is, that as it may be, a lot has happened between then and now. First, there's a new National Assembly in place, new House of Representatives, new Senate. In Nigeria, it's a bicameral legislature.
Right.
And to fast-track the petroleum industry bill and some other strategic bills before the National Assembly, they have changed the rules of the House, the rules of conduct of business of the House,
right,
to make it possible that bills that were not concluded by the last Assembly can be taken from wherever we stop in the last assembly, can be taken by this assembly.
Okay, we hope that it happens sooner. We hope that it happens sooner. Let's talk about that petroleum industry bill and what is envisaged. Obviously, a new kind of relationship with oil majors, local investors coming to the fore, deregulation on the downstream side. But the big challenge is that local investors, even if they want to get involved, financing some of these deals has been a major challenge. How's the bill going to be structured to make it easy for local participation in the oil sector?
I'd like to make a few things clear. I don't know what anybody means by uncertainty over the PIB. There's no uncertainty over the PIB at all. But what's the PIB all about? First, it entails the creation of new regulatory institutions, which will make conduct of business in the area easier, more friendly. And the other one is transformation of upstream contractual agreements. The third one is a new fiscal regime in such a way that will have a different regulatory agency for upstream operations, another for midstream operations, and another for downstream operations. And of course, there will be deregulation of the downstream sector. That's been envisaged. And finally, reduce government participation in industry and enhance transparency. In all resource-rich countries, you know the issue of transparency has been some sort of a challenge, and the PIB deals with the root of the matter.
Right.
On the issue which you mentioned, how will Nigeria handle the whole of this in terms of outflows and cancelled contracts? First, when it comes to investment in the oil and gas industry, you must balance risk and reward. And you won't go and invest in a place where you're not sure you will get reward for your investment. One of the things the PIB bill does is to ensure that it accommodates the interests of the locals. Now, the other question is, can the locals handle the fallout of this? The answer is yes. You remember that a few years ago, we passed the local content law, which, of course, is a process to empower the locals to participate in the industry.
Okay, Honorable Peter,
transfer of technology.
Let's move on to another issue. News out is that we might see the removal of fuel subsidies as early as first quarter of 2012. It's good savings for the federal government, but a major fallout for the average consumer who's really needed subsidies for their big generators at home, in business. The inflationary impact is going to be significant. Is there going to be a managed approach?
Well, I cannot speak for the federal government of Nigeria, but I am aware it makes business sense to me that the subsidies are removed. It might not look popular today, but over time our people will appreciate that it makes a lot of economic sense. If you compare other oil-producing countries or other resource-rich countries, apart from maybe Venezuela, in all cases, Venezuela, Saudi Arabia, where they have to keep subsidy to sustain the government in place, it has not helped those economies in any way at all. Mm-hmm. The statistics are there. I wish we have all the time. So I think that it will ultimately benefit the common man. I'm not holding forth for the federal government of Nigeria. But if you look at the statistics, ultimately it will benefit the common man.
After the break, more stories making headlines this week.